Hello Super Traders and welcome back to SuperTraderTV's London pre-market session. Before we are going to talk about today's trading opportunities, first let's go over today's upcoming major economic event. Today's most important events are reserved to the market that we have not mentioned for a long time, the Swiss market. The Swiss monthly trade balance print came in today lower than economists expected, but higher than the month before. At 8:30 a.m., the Swiss labor rate results will come out. The results are expected to remain the same as the previous quarter at the value of minus 0.75%. The event will be followed by the Swiss National Bank monetary policy statement and press conference. In the New York session at 12:30 p.m., the US weekly unemployment claims print results will come out. The results are expected to be positive. The last event of the day will take place at 2 p.m. when the US monthly Philly Fed Manufacturing Index prints results will be released. The results are expected by economists to come out higher than the month before. After going over the news and the upcoming events, it is time to say good morning, Yaron.
Good morning.
How are you?
Much better than expected.
Much better than expected. Oh, this is good. What do you have to say about what we heard yesterday from the Fed, from the Chair Janet Yellen, on the Fed deciding to postpone the interest rate hike?
Okay, first I want to tell you that it seems like you feel very good today.
I feel great.
Yeah. What is the best day of the week? What is the day that is most favorable by you?
I can say I like all the days, and to be politically correct, but of course
it's my answer.
It's your
What
answer.
is your answer?
First of all, I'm enjoying every day of the week, but of course, my favorite day I can say it's Friday, because Friday I have time to take care of the house, to meet my friends, but always the bad thing on Fridays that I don't see you, and this is worse than than you can imagine. So I like every day of the week because you're part of it. Good answer? You like it?
It's a very good answer.
Okay.
But you know, I don't like a specific day. I like every day, all days. It depends what I'm doing during the day.
Okay, so right now we're doing a very interesting thing. We're talking about the market.
Absolutely.
We are after the major event. We're after the Fed minutes. And what are your conclusions and how can you see this event affecting the market?
N, H, and C.
N, H, and C. Explain. What do you mean by that?
You know the song, Bob Marley song? No woman, no cry.
Okay.
So today it's no hike, no cry.
No hike, no cry. But actually we can see as we mentioned also in our news, the US main indexes are rebounded right now. Everything is advancing. Even the US dollar, after depreciating right now, is consolidating and even starting to increase once again. So it looks like the market, it's really connected to fundamentals. As we mentioned lately, we saw disconnected between the market's performance and the fundamentals. As right now, it looks like everything is connected.
I don't think that it's not a question of connection or disconnection.
Okay.
It's only a matter of interest rate hikes, and especially the pace of the tightening policy, the further tightening policy in the upcoming years. And that's what is more important. Of course, we know that until December, we have less than 50% chance that we are going to see interest rate hike, and it's a surprise. But what is more important now is the tightening pace. And by having said that, I can tell you that the median estimate for federal fund rate at the end of 2015 depreciated to 0.625%. And the previous median estimate was 1.125.
Okay, which presents for us, it's
of
like
course,
a question.
The pace of the next hikes are going to be slower.
Okay.
It's going to be slower. And of course, the median estimates for 2016 declined to 1.875% from 2.5%, which was the previous median estimate. So we know that the pace is a bit slower and it is more reasonable. The Fed didn't reverse from its course. It's still The Fed still would like to hike interest rate, but the pace is different, the pace is slower, and it's very important because a faster pace could cause a free fall or market collapse. And now market participants understanding, and of course we see fireworks in the US market. We are going to see a continuation of the upward trend. We are going to see fresh new highs during the upcoming week. This is with more than 80% success.
When you're saying fresh new highs, you're referring to the S&P, I mean, to the major indexes, to the US dollar. What we're going to see increasing to fresh new highs?
We saw that the US dollar depreciated yesterday as the market already priced in interest rate hikes during the second quarter of 2015. So in June, and now it's more likely that we are going to see the next hike by December or September or December. I don't know yet, but we know that the Fed postponed its forecast, and this is why the US dollar depreciated yesterday. But the depreciation or the free fall of the US dollar was too sharp, and that's why we see a correction. And this correction presents another great selling opportunity versus the US dollar today until the end of the week. I'm expecting that the US market will break out to fresh new highs, as of course no hike, no cry, NHNC. Of course, we are going to see the US market moving to fresh new highs.
But
no
after
hikes
this
means
week,
that traders are going to buy stocks, to take more risk, because they don't have any alternative. Money markets and cash equivalents are not the right channel yet in order to increase your funds or to get more higher yields. And that's why the S&P 500 is going to break out alongside all other major global stock exchanges that are cheerful for the Fed, and they know their job. They know how to move the market.
You're referring to the Federal Reserve, you mean?
Yes, and yesterday we discussed particularly on the pace rather than the interest rate hike. We know that we are going to see further tightening, but the main issue here, and now we know that it is much better, the pace of the tightening policy.
So you mentioned that we have the opportunity to sell the US dollar to
Correct.
the end of this week.
Correct.
But we're expecting the US market to reach new highs
Correct.
next week.
Absolutely.
So are we going to buy S&P 500, for example, today, or are we going to wait for next week?
Yes, just until the end of this week. This is my favorable scenario. As I told you, I would love to see the S&P 500 break to fresh new highs before the next market correction. It's going to be a bit more painful. It's going to be we are going to have a very profitable activity in the upcoming future. As I mentioned, I'm expecting a massive correction by the S&P 500, at least 10%. Now I can tell you that it's at least 10% from the new highs that we are going to see in the upcoming week.
Okay, so the S&P 500 presents a buying opportunity,
Correct.
while the US dollar presents a sell opportunity
Correct.
till the end of the week. Right
Absolutely.
now, I want to shift and to ask you about commodities. Mm-hmm. Right now, we can see that gold, after being bearish a bit lately, advanced today 1.58%. I'm assuming this movement is connected to what is happening right now in the US market.
100% connected to the interest rate hike. Of course, when the US dollar is depreciating, gold prices are appreciating, and it was a significant meeting minutes speaking about the last FOMC meetings from yesterday. It is opening a very bullish bias to the gold, and of course, as we mentioned, and our trading activity, all of our open positions on gold to the second quarter of 2015 are out of the money, but right now we are going to increase our risk exposure in favor of gold. After the last FOMC meeting, we are going to buy gold for intermediate term, and we are going to look for expiries from 1 month to 3 months from now, as we are expecting gold to reach to 1,300, 1,400 in the upcoming months after the last announcement.
Okay, now I want to ask you about crude oil. We've been mentioning that crude oil lately have a certain range that it's going back and forth. Right now we can see that crude oil current value is 45.64, which is relatively high, but still this asset depreciated today 2.17%. Do you think we're going to see it? I mean, of course, I'm looking at futures. You probably have a bit different value. But do you think this asset have a further movement to the downside? Are we going to sell crude oil today?
Yeah, maybe not today, but in the upcoming days, yes, I'm still in favor of the downside. I'm still bearish. Temporarily, we are neutral because of the dollar depreciation. We are a bit neutral. Of course, oil prices are connected directly to the US dollar movement or the US dollar strength, and that's why we are neutral rather than bearish. But I think that we are going to see anyway the bearish bias on oil is so strong that we are going to see. I'm expecting oil prices to reach 40 in the upcoming weeks.
Okay, so as we mentioned, we have a buying opportunity today in the US main indexes and a selling opportunity with the US dollar, of course. We're also bullish right now on gold, and we're expecting crude oil to depreciate. We have some more ideas, of course. Johan will have some more ideas that we would love to hear from you. But first, taking a short break. When we come back, we will continue to talk about today's major economic events, trading opportunities, and of course, we might even start to trade. Stay tuned.